Michael Burry warning, any moment everything will come crashing down. Michael Burry, who is best known for shorting the 2007 mortgage bond market, warned retail investors of losses worth the size of countries if prices of cryptocurrencies and meme stocks decline. In a series of tweets on June 17th, which have since been deleted, Burry cautioned traders about the mother of all crashes, Bloomberg reported. Today we're going to talk all about the biggest market crash in history coming down. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. Michael Burry and Jeremy Grantham are bracing for a devastating crash across financial markets. They're far from the only experts to warn that rampant speculation fueled by government stimulus programs can't shore up asset prices forever. The billionaire investors Leon Cooperman, Stanley Druckenmiller, and Jeffrey Gundlach have also sounded the alarm. The same is true for the Shark Tank star Kevin O'Leary, the market prophet Gary Shilling, and the Rich Dad Poor Dad author Robert Kiyosaki. Here are the most striking warnings from these 8 market experts. Michael Burry. Burry in June described the markets as the greatest speculative bubble of all time in all things, and said retail investors were buying into the hype around meme stocks and cryptocurrencies before the mother of all crashes. Earlier this year, the investor of The Big Short fame, who runs Scion Asset Management, pointed to Tesla, GameStop, Bitcoin, Dogecoin, Robinhood, and the red-hot U.S. housing market as signs of speculative excess. Jeremy Grantham. Grantham in January said the market was a fully fledged epic bubble and described it as the real McCoy. When you've reached this level of obvious super enthusiasm, the bubble has always, without exception, broken in the next few months, not a few years, the legendary investor and GMO co-founder said. We will have to live, potentially, possibly, with the biggest loss of perceived value from assets that we have ever seen, Grantham added. Leon Cooperman. Cooperman expressed deep concerns about financial markets in May. Everything I look at would suggest caution, intermediate to long term, would be the rule of the day, the billionaire investor and Omega Advisors boss said. When this market has a reason to go down, it's going to go down so fast your head's going to spin. But Cooperman described himself as a fully invested bear because factors that typically cause bear markets, rising inflation, recession fears, a hostile Federal Reserve, weren't present. Stanley Druckenmiller. Druckenmiller said in May that the bull market reminded him of the dot-com boom, but he cautioned that asset prices could continue rising for a while. I have no doubt that we're in a raging mania in all assets, the billionaire investor and Duquesne family office chief said. I also have no doubt that I don't have a clue when that's going to end. I knew we were in a raging mania in '99, but it kept going on, and if you had shorted the tech stocks in mid-'99, you were out of business by the end of the year, Druckenmiller added. The investor indicated he would pull his cash out of equities in a matter of months. I will be surprised if we're not out of the stock market by the end of the year, just because the bubbles can't last that long, he said. Jeffrey Gundlach. Equities are undeniably expensive, Gundlach said in March. The billionaire investor and double-line capital boss said that claiming the stock market was anything other than very overvalued versus history was just to be ignorant of all the metrics of valuation. He predicted that stocks would fall by upwards of 15% when the downturn comes. Gundlach, known as the Bond King, predicted that the retail investors who had piled into meme stocks and other speculative assets wouldn't stick around once prices started dropping. We'll have a tremendous unwind of a lot of money that thinks that the stock market is a one-way thing, he said. Kevin O'Leary. O'Leary said in April that stocks would eventually crumble, but he framed the downturn as an educational opportunity for rookie investors. Buying the dip is more rock and roll, but what invariably happens is you go through a massive correction and you learn a very important lesson, the Shark Tank star and O'Leary Funds chief said. The generation that is trading right now has never gone through a sustained correction. It's coming. I don't know when, I don't know what'll trigger it, but they will learn their lesson, he continued. If you have a lot of leverage on, it's a hell of a lesson because you end up in a negative net worth position, O'Leary added, but you do learn from it. Robert Kiyosaki. Kiyosaki tweeted in June that he was expecting the greatest market crash ever. Biggest bubble in world history getting bigger, the personal finance guru and author of Rich Dad Poor Dad said. Biggest crash in world history coming. Kiyosaki has accused the Federal Reserve of overstimulating markets and devaluing the dollar. He's advised investors to prepare for the downturn by stocking up on precious metals and cryptocurrencies. Gary Shilling. Shilling predicted in April that financial markets would nosedive, but he declined to hazard a guess at when the crash would arrive. "I'm not making any firm prediction as to when this thing is going to collapse," the veteran forecaster and president of A. Gehring Shilling & Co. said. "Speculations outrun any logic, and that's probably going to be true of this one," Shilling continued, "but at some point, boy, there's going to be a lot of blood on the floor." Talking about Burry, the big short investor Michael Burry also says the stock market is dancing on a knife's edge, and fears he's being ignored again. Rampant speculation and widespread betting with borrowed money have driven the stock market to the brink of collapse, Michael Burry said over the weekend. "Speculative stock bubbles ultimately see the gamblers take on too much debt," the investor tweeted, along with a chart showing the S&P 500 index and levels of margin debt both soaring in recent months. "The market is dancing on a knife's edge," Burry added. Burry said the flow of cash from actively managed funds to index trackers and the boom in day traders sharing tips on social media and touting meme stocks had helped to fuel the market upswing. "Passive investing's IQ drain and stonks group hype add to the danger," he said. In another tweet, the Scion asset management chief highlighted a massive spike in the volume of bullish call options being traded. He added the hashtags "caution to the wind" and "blow off top" to emphasize his view that those types of wagers are propelling stocks to extreme levels. Burry is best known for his billion-dollar bet on a crash in the U.S. housing market in the mid-2000s, immortalized in The Big Short. Christian Bale portrayed him in the movie adaptation of the book. The investor also laid the groundwork for the GameStop short squeeze when he backed the video game retailer in 2019 and wrote several letters to its bosses. Burry tweeted on Sunday that his latest warning was being ignored just as Wall Street dismissed his warnings during the housing bubble. "People say I didn't warn last time," he said. "I did, but no one listened. So I warned this time, and still no one listens. But I will have proof I warned." Burry doubled down on his view by adding that quote to his Twitter bio. His display name is Cassandra, a reference to the priestess from Greek mythology who was cursed to share true prophecies, but never to be believed. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye!